Welcome to the next episode of the Chartered Accountant's Pen. In this episode, we'll discuss IFRS 12, which focuses on the disclosure of interests in other entities. The objective of IFRS 12 is to help users of financial statements evaluate the nature of and risks associated with an entity's interests in subsidiaries, joint arrangements, associates, and unconsolidated structured entities. IFRS 12 applies to all entities that have interests in subsidiaries, joint arrangements, associates, or unconsolidated structured entities. Entities must disclose significant judgments, information about each type of entity they are involved with, and how these relationships affect the group. Disclosures must cover the group structure, details of non-controlling interests, and any restrictions on the use of assets and liabilities. For joint arrangements and associates, disclose the nature of the relationship and provide summarized financials for material entities. When involved in unconsolidated structured entities, disclose their purpose, associated risks, and any income or losses recognized. It is important to disclose the significant judgments and assumptions made in determining the type of involvement. Disclosures may be aggregated or individually provided, depending on materiality and user relevance. IFRS 12 enhanced transparency, improves comparability, and therefore supports decision-making. Let's look at a practical example of IFRS 12 disclosures for global manufacturing company, GMC. Extract from notes to the financial statements for the year ended December 31st, 2023. 1. Nature of interests in other entities. GMC has interests in subsidiaries, joint ventures, associates, and unconsolidated structured entities. Subsidiaries. GMC consolidates entities where it exercises control, typically through majority voting rights or contractual agreements. Key subsidiaries include GMC Germany GmbH, based in Germany, with 80% ownership and voting rights. GMC Brazil, fully owned and controlled in Brazil. GMC China Company, with 60% ownership and voting rights in China. Joint ventures. GMC operates a 50% owned joint venture in India, classified as a joint operation. This entity produces auto parts, and GMC shares direct rights to its assets and obligations. Associates. GMC holds a 25% stake in Tech Innovators Incorporated, a U.S.-based technology firm accounted for under the equity method. Unconsolidated structured entities. GMC holds a 10% investment in GMC Receivables Trust, a structured entity used for asset-backed financing. GMC does not control this entity, but provides liquidity guarantees. Significant judgments and assumptions. Key judgments include consolidating GMC China Company despite 60% ownership, due to veto rights over strategic decisions. Risks associated with interests. Subsidiaries. Currency risk from operations in euros, Brazilian reais, and Chinese yuan. Regulatory restrictions in China limit profit repatriation, affecting 50 million Chinese yuan in cash. Joint ventures and associates. Liquidity risk. The India JV has $10 million debt due in 2024. GMC may need to fund its 50% share. Structured entities. Credit risk. GMC guarantees up to $20 million for the Receivables Trust. Total maximum exposure is $25 million. Investment plus guarantees. Classifying the India joint venture as a joint operation, not a joint venture, because GMC shares control of assets and liabilities. Summarize financial information. India joint venture, 50% ownership. Total assets, $200 million. GMC share, $100 million. Total liabilities, $120 million. GMC share, $60 million. Revenue, $150 million. GMC share, $75 million. Profit, $20 million. GMC share, $10 million. Associate, Tech Innovators Incorporated. Carrying value, $45 million. GMC's share of profit, $5 million US. Changes in ownership. GMC increased ownership in GMC Germany GmbH from 60% to 80% in 2023, leading to full consolidation. Divested a 30% stake in Mexico JV, now classified as an associate with 20% ownership. 6. Structured entity disclosures. GMC Receivables Trust. Purpose: securitizes $150 million US in trade receivables. Support provided: $20 million US liquidity guarantees and servicing commitments. Maximum exposure to loss: $25 million US. Investment plus guarantees. 7. Restrictions on funds transfer. GMC China Company has 50 million Chinese yuan in restricted cash due to local regulatory requirements. Thank you for watching Chartered Accountants Pen. For more insights, subscribe and hit the bell icon.